It's a T3 Tuesday, so we're going to welcome on our friend Derek Oldensmith. Let's give a warm welcome to Derek here this morning. Derek, good morning. It's great to have you back as per usual. How you doing today?
Good morning, Ryan. Doing really well. Glad to be back. Thanks for having me.
No problem. I'm just going to start with this. Did you have Palantir going into the print last night?
I had some Palantir short going into the print, but fully hedged out with options. So I have a position in it, but it's neutral, just because of the option spread that I had put on into it. So this gap up this morning is not going to be a problem for me. I think that Palantir is the most interesting stock of the day in how it reacts. So my initial thought process yesterday after the print, when it was trading in the mid 160s, was holy cow, what a phenomenal earnings report for this stock to not be up more. And that's kind of been a theme. I don't know if you've been noticing it, but stocks and even at the index level also, I don't think that we've been reacting good enough to positive news a lot recently, with maybe the exception of Meta and Microsoft. But Meta and Microsoft had some of the most incredible earnings reports I've ever seen. Honestly, Palantir was right behind it. That Palantir report was phenomenal. Just looking based on the report at all, by itself, I thought the stock should be trading to at least 175, 180. So the fact that it was only trading at 165 last night, I was like, this is interesting, because one of my favorite signals in the market, which I think I've discussed with you in the past, is that when stocks don't react like as good as they should, or they don't go up at all on good news, a lot of times that becomes a signal for the other side. Now, this morning, stock's improving. It's up at 170, 150. So it seems a little bit more reasonable with such a phenomenal earnings report that it would be trading at this price. But I'm going to be watching Palantir really, really closely today. If this thing were to fail back through 170 early in the day, I'm probably going to look to short that, which sounds really counterintuitive on such an incredible earnings report. But it goes back to kind of a common theme that I've been seeing here play out over the course of the last week or two, which is that really good news has not been giving the right reactions to stocks. If for some reason, and this is an if-then statement, I'm going to actually put it as a lower probability situation. If for some reason Palantir were to really fail down today and close like flat or only up a little bit, or God forbid negative, I think the thing's done. I think it's completely done, because the fact of the matter is, like, Palantir, again, the earnings report absolutely crushed it, but it's also a phenomenally expensive company. So at some point you wonder, like, is it going to take 20 years to grow into the valuation or what? But the biggest thing that I want to note to anybody who's listening is, one, if I were to short it, I'm only shorting it on the way down. This stock is a momentum name. It can rip your face off if you're just like, oh, it's expensive, so I'm going to short it. It's a great way to lose a lot of money in a short period of time. So signal number one is I need to see this thing actually failing back through 170, and then I would look for a potential short just to see what it can do, because this market to me recently has been feeling really heavy. We noticed it.
Let me jump in there. Let me jump in there real quick, because you said a couple of things and you're absolutely right. So first of all, we have been talking about this phenomenon recently. One of the ways we've been looking at it is, okay, well, the options imply such and such move. To use Palantir as an example, the options implied a 10.8% move. We didn't get that in the after hours. And to your point, even when it behaved better today, we still didn't get that 10.8%. Furthermore, you had also covered all of this. I'm amazing how succinct you were with that. But we've noticed that this is a common theme amongst this earnings report. In fact, it has been option sellers that have won these prints because the move has not been what the options have been anticipating. The lone exceptions, or I shouldn't say the lone, the two big exceptions were Meta and Microsoft. The names that you mentioned, those, of course, had amazing reports, smoked earnings, and I think even some of those came in the next day. So your Palantir setup here sounds absolutely right on. I think that's perfect. What a call, too. This is done if it moves back through 170 or if it goes red here today. And I think you also balance that quite nicely with saying, yeah, you can't just short it because it's expensive and the PE is high. That's how you get carried out on a stretcher. So I like this. Wait for it to kind of confirm a down move. Let me ask you something. We've got the 20-day moving average at 153. I didn't hear you mention that in any of your rundown. Do you factor the 20-day moving average in at all? Like the last time we came in here, we peaked beneath it and then we rallied again to new highs. If we lose the 20-day, would that also help your short, or would you try to get short prior to that test anyway?
Sure. So the 20-day there is pretty close to the 21 EMA, which is actually what I look at a little bit more closely. I'm a big user of an 8 and 21 EMA. I consider the space between the 8 and 21 EMA for any stock or market that I'm looking at to be what I call technical equilibrium for that stock or for that market. So right now, Palantir is trading at 170, 150. The 80 EMA is at 160. The 21 EMA is a little bit above 153. So I would say technical equilibrium for the stock is between basically 160 and 153, and it's $11.50 extended from its upper band of equilibrium. Obviously, a stock that's extended can always become more extended, especially when it's a high beta meme type of stock, or especially when there's a news event like an earnings report. That's really how stocks can get more and more extreme into extension. If Palantir were to lose 153, then you have a failure of the uptrend that the stock has been in. So at that point, you'd have basically a complete reversal in the stock. That's too deep of a call for me at this point.
Okay.
The way that I approach markets is really like one step at a time. For the moment, what we have on our hands is a phenomenal earnings report with a big gap up. In order for a failure and a reversal below 153, you have to first see this thing trade back below 170 today. Then you need to see it fill the gap from the earnings report, which means it gets back down to 160, which is where that 80 MA is and where there's going to be previous resistance, which turns into future support. Do we lose that 160 support level? Oh, wow, we lost that 160 support level. Now all of a sudden 153 is in the cards, but that's like 4 levels down. It's 4 steps away before we get to that point. Now, as a trader, I don't believe in predicting reversals. I predict retracements, and then I have rules in place where a retracement can become a reversal, and I can capitalize on that. There's a age-old saying in trading. There's a lot of age-old sayings in trading that I completely disagree with, but this one I do agree with, which is don't pick tops and bottoms, right? So I'm not here to pick an absolute like top in any stock or the market or Palantir. I'm here to note like, hey, Palantir is probably not trading as good as it should be on such a phenomenal earnings report. Does it mean that profit takers come in, sell this thing back down? Then I could short it through 170. Then I could have an initial target in the low 160s, but I can hold 25 to 50% of my position just in case that retracement lower actually turns into a full-on failure, where if this thing were to get down to 140, which is a very low probability, I can still have stock. So that's how I can maximize reward for lower probability situations when they actually occur.
Okay. That is an absolutely awesome breakdown. Folks, trade with Derek all next week for free in his Pro Desk virtual trading floor that is August 11th through the 15th. QR code's on the screen. We threw the link in the chat. Go ahead and join that. Derek, really good stuff. Look, the last time that we talked to you, you thought that the market looked extremely bullish. And here we are. The market has pushed to new highs here. So I got to ask you, what's your update? What do you think now?
I'm not nearly as bullish as I was. I was really bullish for that July period, seasonality strength.
Yep.
The systematic bid was underneath the market, but that's over now. So as we come into August and September, there's a lot more seasonal weakness. You're losing the systematic bid. It's pretty much fully in the pool. With that said, it's being replaced by the corporate buyback bid. So there will be some underlying support to this market. Thursday into Friday, we had our first real pullback almost since April, right? And it was a really big pullback. There's a big question that is going to be answered, I think, this week. Is that pullback the beginning of something more? Is it the end of the uptrend that we've been in since April? Or was that just a healthy, profit-taking 2-day correction of a monster market that is then going to lead to a new high? I am looking right now to see if this market gives a lower high. So I'm looking to short the gap up this morning to see if we can get a lower high from that previous high. For the moment, my biggest expectation for August is chop. Not a continuation of our uptrend, not necessarily a crazy breakdown or anything like that either. I'm expecting chop with maybe some downside weakness. The market would only become more structurally broken, I think, if we lost like SPX 6200, really 6190, where then at that point you would actually get the systematic bid that we had for the last 3 months to become selling at the same time that you're actually confirming a reversal in the market. Because if you lose Friday's low from last week, then you'd be going from a pattern of higher highs and higher lows to lower highs and lower lows. Again, I'm not here to predict the reversal. I'm saying at this point, I think there's a much higher probability of chop, but I'm a big believer in if-then statements with the market. If we lose Friday's low, if we lose S&P 6,200, then I think we are setting up for actually a much larger sell-off to retest 6,000 in the S&P at that point. So.
Okay, that's absolutely fantastic. Folks, I just want to remind you that on Friday, on the day here that we're talking about, the candle that we're talking about, we had Mark Petrino come on the show and say 620 sure looks to be the level that it needs to hold. And did it ever? If we end up breaking that now, things change here. Okay, we talk tariffs every time. I know Trump was just on. I couldn't hear it because I'm obviously doing the show, but I know Trump was just on CNBC here. We talked tariffs last time, and you had mentioned that the substance of the deals matter. Now we've got some of that, right? We've got some more framework. We've got some more substance of some of these deals that have been completed. There's like $1.5 trillion of investment coming into the United States. How do you break this down? What are you looking for any trades based off of that?
Sure. So a lot of sell-side analysts, had been predicting that we were going to end up around the 10% number, and now it looks like we're going to end up around the 15% number. The bottom line is it's all noise at this point until it hits the economic data. That's really the bottom line. We saw a event-driven bear market. That's a specific term. In March into April, it was an event-driven bear market. It was brought on by the onset of fear related to tariffs. The big question is, does an event-driven market lead to a cyclical bear market? A cyclical bear market is when you actually see it in the economic numbers. I'm an economist by nature. I studied economics in college once upon a time. The one thing that was really hammered into my brain through all my studies is the negative repercussions of tariffs. Maybe this time will be different. It's certainly being offset to some degree by the AI story. I would argue that any degree of weighing on the economy that's coming from tariffs is to some degree being offset by the semiconductors and by the AI story. But the real question is, at this point, I think market participants need to see it hit the economic data. You could argue that we're starting to get little tastes of that right now. With that last jobs number that came out on Friday. The last two inflation numbers that came out were moderate upticks in inflation, and a piece of that was related to tariffs. But I'm paying very, very close attention to this earnings season for companies that are affected by tariffs just to see what they're doing, because that's the read through. So if you look at like Procter & Gamble's recent report, they said in the next month or so, we're expecting to increase prices on 50% of our products related to tariffs. And it's like, okay, well, that tells me two things. One, they haven't done it yet. So you're not even seeing that in the economic data at all. And, is that similar with other companies? Well, Adidas is saying the same thing and Walmart's saying the same thing. So we're at the point here where if there's going to be prices...
Just to play devil's advocate, Dell said they're not going to see any impact from tariffs after they reported their best quarter in the company's history.
Yep, and there have been companies on the other side. Amazon has been saying that they're not going to be increasing prices related to tariffs. That's Amazon itself. Obviously Amazon represents a lot of other third-party sellers. It could be a little bit different. So that's the big thing. It's exactly what you're saying. I'm paying attention to the companies that are saying that they're going to be increasing prices versus the companies that are not, and trying to figure out the timing on the read-through on tariffs. If you look at a recent note from Goldman Sachs, when they adjusted their expected tariff impact from 10% to 15%, or a full tariff rate from 10% to 15%, they said they expect a 1.7% increase in inflation over the course of 2 to 3 years, very spread out, and a decline in GDP growth to 1% related to those tariffs. So, the people at Goldman are pretty smart. They're definitely not right all the time, but I'm paying attention to a lot of that data and really seeing if it comes through in the numbers. And that's the big question. We had the event bang does it ever turn into the numbers or not? So we'll see here, August and September, how it continues to move on. But we got seasonal weakness here. We have a high on Thursday. You had a not great jobs number. Does that turn into something more? We'll find out.
Okay. A really good breakdown there. Folks, again, trade with Derek all next week for free in his Pro Desk virtual trading floor, August 11th through 15th. Learn with Moses saying that the QR code is not scannable. I'll double check that here, but just in case I threw that link in the chat, be sure to check it out. Derek, really good stuff. I do have one question here from one of the viewers. And I'm sorry for going back, but you were talking earlier about Palantir. Someone was asking, how did you estimate that $175 price for Palantir?
It's based. You said it already. It was based on what the options market was implying, which I think was actually a move to 178. So in my mind, on a report, that report couldn't. I mean, show me a number in the Palantir report that could have been better than it was. It was phenomenal. So when I see a perfect earnings report, my expectation is that you're going to be able to get to at least close to the upper band of the priced in move based on the options market. And when I see a big miss from that, like, perfect report, so really we should get to near 178, but if we're trading at 165, all of a sudden you got to scratch your head and say, what could they possibly have done better that really could have gotten it closer to that upper band of what the options market was implying for this move? And the answer is, in my opinion, they literally couldn't have done anything better than on that report.
And I was actually going over that before you got on here. I think the one thing that really stood out to me, the rule of 40, I don't know if you're familiar with that. I actually had to look that up here. The rule of 40 is a financial metric used to measure SaaS industry, stating that the company's combined revenue, growth rate, and profit margin should equal 40%. Palantir's was 94. 94. It's very, very difficult to think what could they have done better. Just an absolutely monster report. Derek, really great stuff as always. Really appreciate it. I almost forgot, guys. I almost forgot, but I caught myself. You have anything on deck? Are you looking at anything here for the drones, given Secretary Sean Duffy's comments yesterday?
So, related to drones, but a little bit different. I'm going to throw out a dangerous one for you.
Let's go. My chat loves danger, baby. Let's go.
I like looking for a big short in JOBY.
Let's go, Derek.
It's a dangerous one. I'll harken back to what I said in Palantir. Don't just blindly short things and get your face ripped off. But, we're talking about a company with, I don't know what the market cap is now, $18-20 billion. It doesn't even have any revenue. That is a money-losing company that just bought another money-losing company. This is actually one of the first instances I've ever seen of the company doing the acquiring not sell down immediately on the report. But I think where the short comes in is they technically report earnings, I think, tomorrow after the close, but pre-revenue companies, the earnings report is pretty much always a non-event. I think that you're going to get a secondary offering in this thing that's going to hit it down at some point. Actually, and I want to make note, I typically hate when people predict secondary offerings because, every crappy company that goes up, you go, I'm going to short it because they're going to put on a secondary offering. So I don't typically like that. But JOBY has a history of doing secondary offerings. And if they're buying out this other company in cash, or they might do it with stock, they don't have that much cash to be able to just lay out $125 million on top of the run rate of the amount of money that they're losing to buy another company that loses money. I just don't think that they can really properly afford to do that without some major stock dilution. So either the deal goes through entirely with stock, which weighs on the stock itself, or they do a secondary offering, or they potentially do both, and it leads to a big short. I don't think, for optic reasons, that they're going to announce a secondary the day before or the day of their actual earnings report. We might need a few days here, but as this thing extends higher, you could maybe, do it through puts. So exactly what you're risking in it so that you're not hurting yourself too badly. I have some stock right now that's short outright in it, but I'm looking to, size up in this thing. And if the secondary offering happens, which I think it's a decent probability, you see this thing back below $16, and I think it could be a huge W there. So
real quick, just because you said they had a history of offerings in the past 3 years, in 2024, 3 and 2, they have done one offering every year without fail. 2 of those offerings come at the beginning of October. You also referenced the earnings date. That comes here on Wednesday after the market. So maybe they report on Wednesday, and then a month, maybe 2 months later, they end up doing the offering. Derek, phenomenal stuff here today. Really appreciate it. Folks, hit that link in the chat to trade with Derek for free all next week in his virtual trading floor. That's August 11th through 15th. Derek, thanks so much. Good luck here today. Can't wait to follow up with you next time, okay?
Thanks for having me. Talk to you soon.
That is Derek Olin-Smith from T3. Richard Judge said it the best earlier, quote, "Those T3 guys are all awesome." I second that, Judge. They absolutely are. Really, really good breakdown from him here today. And how about that? Derek, not afraid to give you a couple of calls, gave you some other things to consider there. That's exactly the type of stuff that we want to see.